All right, so then I'm getting the thumbs up. Okay, so then let's begin our Technical Tuesday. So yeah, good morning, everyone. Thank you guys so much for watching and for viewing today's Technical Tuesday session, where we analyze what's taking place on the Euro USD and US dollar Japanese yen, and we tell you about particular trading opportunities that we may be looking forward to on these two major currency pairs. For those who may not know, the Euro USD is one of my favorite currency pairs. It's what I primarily started with when I actually started trading trading the currency market. I started primarily with the Euro USD. So I love trading this pair. I know with some people they have a difficult time interpreting what's happening with the euro, but I find it quite easy. But other than that, let's move forward and let's talk about what we see right now on the daily chart of the Euro USD. And as you guys know, especially if you've been watching the previous Technical Tuesday sessions or recordings, you can see that price was in consolidation on this ascending channel, which was really a weekly bearish flag or a long-term bearish flag. And what we mentioned is that we should see an overall bearish bias if price breaks outside of this flag pattern, which it did right here. We should expect to see momentum to the downside, and that's what we're looking for. Our long-term bias is to the downside, mainly due to this bearish continuation pattern called the bearish flag pattern. You can see it a little bit more better on the weekly chart. Let me just draw this in real quickly for you guys. But yeah, good morning, Peter. Thank you for coming. I know Peter, he's one of our VIP students. He's actually a really good trader. I know he credits us for that, but I think he did a lot on his own. He studied a lot and became good. But anyways, so then we have this bearish flag pattern that we see on the weekly chart. We see this flagpole right here, and we see this consolidation. And you can see that the consolidation wasn't too strong. It wasn't as defined, or the moves weren't as drawn out as this impulse move to the downside. And it only corrected a little bit. It corrected about 50 to 61.8% of the way, and we may talk about that in a little bit for those who are familiar with Fibonacci. And if we don't have that much time, we may not touch on it. But you can see that price was moving slowly and grinding slowly. And, you know, it took more days for it to even reach the halfway point of this move and slide lower. So then we knew that this was a pullback, and we should be on the lookout for a nice break to the downside, and we did get that break right here. But if you go to the daily chart, you can clearly see how price action typically responds, or how price moves after a breakout, because around 75% of the time, most breakouts would be followed by retracements or pullbacks in price. So then this is one thing you have to understand about trading. You know, like after a breakout, then you should look for a pullback or a retracement to retest some structure level. And in this case, we got the breakout. And then what did price do? Price retraced all the way back up here to retest this flag support, or this ascending channel support. Well, former ascending channel support is now functioning as resistance. It came and retested this area right here. And if you look to the right, it retested this $1.14 psychological level, or institutional level. So then it retested this key level, also the 100-day moving average. So then right around here, we knew that price was going to respond and head lower, and we was primarily looking for something to take place. Now this is where I'm going to go to our members area, because I'm going to show you something that we talked about I believe a week ago or 2 weeks ago to the members of our private community. If you go to the weekly outlook section, and you go to this one from not last week's but 2 weeks ago, we mentioned what we were expecting to take place right around this area. And I know I didn't go through all the details. I think I may have shared this more clearly in our live webinar presentation. But anyways, for those that may not know, this is our weekly outlook, and what we tell you guys exactly what to look for, you know, on during the week. So then right here, we mentioned what you should look for Well, no, right here. This is what we was talking about. But this is actually wrong, these numbers. But yeah, but anyways, let me just share with you guys what we was really looking for was for some consolidation to happen right around here, on a smaller time frame, specifically the 4-hour, and we did get that. But before we even talk about that, what I want to do is just give you guys an idea that right now we should be looking for opportunities to sell the Euro USD, and price switch from traveling within an ascending channel to now traveling within a descending channel on the daily. So then now we have this descending channel that is forming. Let me clone this line. We have this daily descending channel that is forming right now, and price may fall lower and retest this descending channel support right now. So then that's what we're expecting. The very fact that we see this switch from this ascending channel down to this bearish descending channel lets us know that we should be bearish on this pair. That momentum has switched or is turned. There was a nice swing that took place in sentiment, and we should be looking for opportunities to sell the Euro USD. And this is what you can do. I know if you just zoom in, I want to show you a little bit of price action, some price action nuggets right here. But if you zoom in right here, we see that price created this candlestick right here, which was a confirmation of the bullish signal. But typically what I like to do is measure the halfway point of this particular candle. So then if you're drawing your Fibonacci, I know it's kind of hard to see right now, but we're drawing in our Fibonacci. And what I'm going to do is expand this out, and I'm going to draw in a horizontal ray or line right at the 50 mark, or right here, right around the 50% Fibonacci level, because right around here is where you probably could see price retrace to, if we do get that retracement and an opportunity to eventually enter into a sell position. You may see something like that moving forward. But anyways, let's drop down to the 4-hour. And on the 4-hour, this is where we saw our consolidation. Oops, let me delete that or remove that. We saw our consolidation on the 4-hour. Price was pretty much in a consolidation pattern. Let me remove these lines because we don't really need these right here. And we saw a break to the downside. So after this consolidation, we saw a break to the downside of these lows right here. And as soon as we got that break, then that gave us a clue that, hey, we need to be bearish on this pair.
That's confirmation.
Yeah, it was confirmation. So then right now, we're going to look for opportunities to sell the Euro USD on pullbacks in price. And if you look right now, you can see that price is sort of in consolidation right now. It may pull back to retest this level, and it may not. But what we want to see is some sort of pullback in price. Let me just change the color. So then for the Euro USD, we're looking to sell now. Our bias is to sell. So then we're going to look to sell corrections or pullbacks in price to the upside. So then if price corrects higher, then we'll be looking to short. So then right now, that's our bias for the Euro USD. And we're going to look to continue shorting pullbacks until we reach this channel support or this structure area right here, because this is the next important key level of structure that we have to identify and isolate. So then what I'm going to do is draw in a box to identify this particular zone, because right around this zone we want to pay attention to what happens in price. But in the meanwhile, what we want to do is continue shorting this pair until we reach this zone right here, and then right around this zone you're going to look to see what happens. But if price decides to break below this zone, then what you could do is wait for price to retest this zone again before looking for another selling opportunity and trade it all the way down to this channel support area. But right around here is a key level or key reversal level or area. Now you may see some sort of resistance around 12.15, which is right around here, which is key because I believe that was 2018 low, the low of 2018. So then you may see some support right around a dollar 1.1215. But if price does break below it, then you definitely need to be bearish because we can expect a nice slide all the way down to $1.10 like we were expecting weeks ago. But this is with the Euro USD. Are there any questions about this pair before we move forward? Remember, we want to buy the dollar. We want to be bullish the dollar, and really that's for a lot of pairs. You really want to be bullish the dollar. You want to look for opportunities to buy the US dollar. So then even if you're trading other currency pairs, just pay attention to that. Because right now the dollar, based on what we see, let me just show you guys. I was going to go here, and I don't even think I cleared out my chart. But yeah, let me go to the Dixie or the US dollar index. Because on the US dollar index, you can clearly see that we should be bullish the dollar. So then we see here for the US dollar index, we see that price formed this double bottom right here on the daily. Price pushed up, and whenever you see this double bottom and a break to the upside, this nice strong impulsive move to the upside, what you want to do is be bullish the dollar on pullback. So then you'll wait for the correction, and then right around here is where we were looking to be bullish on the dollar. And as you can see, the dollar has been pushing higher. So then we could see a nice push higher to the dollar for a while now, mainly because of this bullish reversal pattern that we saw on the daily for the US dollar index. But we need to look for opportunities to buy the dollar. So in other words, sell the Euro USD, sell the rallies. That's what you really want to do. Just stay on that side of the market. Don't try to, unless you see a reason to violate what you see on a larger macro scale, but you want to look for opportunities to sell the Euro USD. That's what you want to look for.
Yeah. Hello, everyone. This is me, Marvin. I was sort of just sitting on the side, allowing my brother Melvin to take over. But, at this particular moment, having favoritism or having preference for the dollar seems to be the safest bet abroad, across multiple investors, especially considering that the U.S. economy is slightly doing better than most other, global economies. Like we see what's happening in the Eurozone, and there's current softening in the Eurozone. And even though, we had good services data this morning that came out, overall, we're seeing some softness there. We're seeing softness in China. I know China growth figures were released earlier, which showed a drop in their forecast, their growth forecast. So then really when it comes to the global markets, the U.S. economy and just the U.S. financial market in general is just a safe place to park their money. And it can also serve as a good safe haven currency in times of risk aversion, or when there's times of uncertainty. So then that's the reason why, for the time being, we're staying long on the dollar. I know we still have the U.S.-China trade negotiations still going on, and anything can turn after we see some type of concrete resolution or deal brought forth from those meetings. But until then, the dollar is still the favorite currency. For one, it could serve as a safe haven currency, and number two, across multiple economies, the U.S. economy appears to be doing a lot better. And due to just the principle of divergence, we see the U.S. is still diverging and still more closely, how can I say it, staying aligned or staying connected to a more tightening monetary policy versus being easy on their monetary policy and trying to stimulate their policy. The Fed may still consider hiking rates, but doing it at a more patient approach versus cutting rates or stimulating their economy in that way.
Yeah. So yeah, that's pretty much some analysis involving the Euro USD and why we feel you should be bearish on this pair. But like I said, you want to trade the retracements, and you can look for either price to enter key zones of structure, like here. This is a key zone of structure right here. You can wait for that, or you can just get in and just have a wider stop and maybe hold your position out for a while. If you wanted to, you can enter a short now, place your stop right here. If you're a long-term trader, if you don't mind holding your trade out for a series of days, you can do something like that, where you can of course enter your short now and maybe place it behind this swing higher, maybe around 1390, around that area. And that could be your sell trade. But for me personally, I like to have tighter stops, because in trading it's all about having a good reward to risk ratio. So that's really the key to really making a lot of money in trading. It's not having a high winning percentage. It's all about having a nice, good reward to risk ratio. And if you can get that, then that's great. You can even enter short and have a tighter stop. Right around here. It's up to you how you want to play it. But I know we go into more details about that in our VIP trading community for those for those who are interested, and we may talk about that briefly right after we talk about the US dollar Japanese yen. So then what I'm going to do is go to the US dollar Japanese yen. Well, first I'm going to go to the daily, and then I'm going to go to the US dollar Japanese yen.
Yeah, and you guys, if you guys have any questions, please feel free, to leave them on the chat box. I know there should be a chat area in the lower left of your webinar dashboard or panel. So then any questions you may have, please let us know. Of course, this is the reason why we're having these sessions, is to provide answers and help to some of our free subscribers. So, yeah.
Yeah. So, all right, right now we're looking at the US dollar Japanese yen, and we're currently looking at the daily chart. And what we were expecting to happen really didn't happen. Price is very bullish now for the US dollar Japanese yen. I know for the past few weeks we were expecting for price to push into this zone and area right here. And you can see that price started consolidating within this zone. So then we knew that there were some sellers positioned here. So then, we were, sort of correct as far as what we was expecting to happen. We really wanted to see consolidation around this area and then a nice push to the downside. But as you guys know, the US dollar has been rallying, and we've been seeing this pair rip to the upside. And it's been moving with very limited pullbacks. Even if you look at a smaller time frame, you can see that there's been very limited pullbacks. And that's one of the reasons why a lot of professional traders have decided to sort of stay on the sidelines of the US dollar Japanese yen for now, because it could be kind of hard to read and interpret. But anyways, let me just share with you guys what we see and what we've been talking about for the past few weeks. So then, as you guys know, we saw these measured moves. I'm just going to share with you on the daily, and then we're going to drop down to a smaller time frame. But you see that we've had these pushes to the upside. Like we had this measure move, and then this measure move right here. These equal measure moves, right? So then right now we have this move that took place, and what we did is draw in this arrow, and this arrow represents something that we call the 236 measured move. And for those that are VIP members of the lab trading community, they should know what that is, or they may know what that is. But it's a special type of measured move that we sort of created and identified, and it works a good portion of the time. But as you can see, price went through this 236 measured move that we identified on this blue arrow, and from here we see that price started stalling a little bit. We can't make a conclusion yet on what is happening, because we don't really know. But because price could still be bullish, we could still see price rally higher and push even higher from here. But one thing we do know is that as you look to the left, because remember, structure leaves clues. Just look to the left. You would see on your chart that we do have structure resistance on the daily chart. So then let me just draw that in right now. So then we have this zone, well, we have this consolidation right here. And we have these highs right here. So then what I'm going to do is just draw in this consolidation in this zone right here, because we could see price push into this area right here. Let me make sure it's at the lows of this candle right here. and then find some resistance up here. And that's what I think is going to happen. I think price is going to find some resistance maybe in this area. If not in this area, then what I'm going to do is identify this part right here. Right in here, the halfway point of this consolidation, or around 113 psychological level, or institutional level, 113 institutional level. So, you know, price could find resistance and some supply down here to push price lower, or we could see a push higher up into this area right here, and then find a nice solid push lower or slide to the downside as well. But this pair is sort of tricky, and I know for me personally, I don't know if I'm going to spend too much time on the US dollar Japanese yen. But if I do, then this is what I would do. What I'm going to do is go to something like the 4-hour chart, because I'm going to show you what we could be potentially seeing on the 4-hour. So then what I think we may be seeing is some sort of topping happening. And let me just draw this out for you guys. This is what I think we could potentially see on this pair. Let me just change the color. I'll change it to this. So then I think we may see something like this. Let me do this. We may see something like this where price pushes higher and pushes into this zone. And then we see price correct lower to retest this level right here. This is structure support on the 4-hour. And then we may see another push higher into this area, and then the fall lower right here. So then for those that are familiar with technical patterns, what chart pattern do you think this is? If we do see something like this, what chart pattern, what classical chart pattern is this? For those that are familiar, if you're not, then that's okay, because this is where you can learn. Because it's very important for you guys to understand and really learn what these classical patterns are, these classical chart patterns, because they give you a picture of supply and demand in the market. Yep. Okay. Yeah. Marie chimed in. Yep. A head and shoulders. Exactly. That's exactly what we see. Yep. Gary chimed in. A head and shoulders. Peter, head and shoulders. That's exactly what we see, or what we could potentially see for this pair. And I think we may see something like that take place for the US dollar Japanese yen. I think we may see some sort of topping or some sort of head and shoulders. But for the most part, before we decide to even sell, price will have to break this low right here. Regardless of what pattern we see, we have to see a break to the downside, a break lower and a close lower, and then a pullback before we even decide to do anything. So then this is what we're expecting. You know, before we even have a bearish bias, we want to look for some sort of reversal pattern to take place. But in the meanwhile, we're going to be bullish on this pair. There's no reason to adjust our bias. We want to look for opportunities to buy on pullbacks. Look for opportunities for price to retrace the structure. And then look to buy upon bullish confirmation. But yeah, that's pretty much what we're looking forward to on the US dollar Japanese yen. So yeah, we don't really have too much to share on this pair. I know Marvin, he wants to chime in and share something.
Well, yeah, yeah. I was thinking about sharing a little small nugget, more intern market analysis nugget that you guys may need to know. But the U.S. dollar versus Japanese yen has some good correlation with U.S. Treasury yield. And typically, what happens is that if you need confirmation on what could potentially happen, like Melvin identified that we're approaching this area of strong supply up here and resistance, and we may see some topping at this level. And what you will usually see that translated, or you will usually see a correlation in the yield market or in the U.S. Treasury yields that can sort of signal whether or not this topping is going to take place. So then, I know this is just a technical analysis session, but I figured since you guys pressed your way and came here, let me just add this one tidbit, this one head, so that if we can, let's just go to U.S. 10-year Treasury yield, so then I can just kind of, show you guys, what's happening with the U.S. Yield market or fixed income. And you can see here how around the same time, what is this? Okay, let me just do this right here.
Yeah, Marv. Yeah. You gotta delete and turn this off right here, and then
Yeah, I'm not as familiar with TradingView, but you can see here how around the same time you see this softness in the U.S. 10-year Treasury yield. And the 10-year Treasury yield is sort of like a benchmark when it comes to how to view the dollar, how to view moves in the dollar. You would normally look at the U.S. 10-year bond or 10-year Treasury yield to just get an idea of what could potentially take place. But it doesn't happen all the time, because one thing you got to keep in mind that these markets are independent of each other. Fixed income, equities, the currencies, they're all move irrespective of one another, but in some way you can't, because you see capital flows between various asset classes. We do get that type of reaction when certain moves shift or when certain decisions are made. So you can see this softness coming in for US 10-year Treasury yields, which is indicative of some dollar weakness. But then, we may see some topping in this chart pattern, and
and we may not. We may see bullish continuation.
yeah, you may see bullish continuation, but that's the reason why you really have to wait to see whether certain key technical levels and structures are broken through in order to really confirm what's taking place. But I just kind of wanted to show that there is a correlation between the two, between the U.S. dollar Japanese yen and the U.S. 10-year Treasury yield.
Yeah.
So if you need some extra confirmation, or you're not quite sure what could be taking place, then you can look at your US 10-year Treasury yield, because it can either serve as a leading indicator, or it can confirm what's taking place at the moment with US dollar Japanese yen.
Yeah. So with that said, I guess what we can do, I know we're at the end of our Technical Tuesday session. We want to give you guys time to ask any questions if you guys have any questions. I don't know if you can tell, but I know both of us, we're sort of under the weather. For some reason, I'm talking, but I'm talking, behind, or, a sore throat, you could say. But I'm good. Marvin's good. And we still going to do these sessions because we care about you guys' development as professional traders. But yeah, this is what we're looking forward to on the US dollar Japanese yen. Now, like I said, we're going to stay bullish this pair. But if we do see a violation of structure or some sort of reason to eventually short, then we'll look for that. That's when we'll change our bias. But for the most part, right now, our bias is still to the upside. We don't want to deviate. We don't want to change our bias until we have solid, legitimate reasons to. Also, if you look at, like, even if you're a price action trader, like if you go to the daily chart, and then if you zoom into this area, because I know a lot of people they look at candlestick price action, and based on the way these daily candles are, there's really no reason to go bearish now. Especially if you look for like different, some sort of bearish pin bar or whatever,
like
or
shooting star, or any type of candlestick pattern that signals reversal. If you don't see that, then there's really no reason to go short. But even when you see certain candlestick patterns and certain candlestick formations, it doesn't mean that we'll see that particular price behavior. And I think often what we don't realize is that a lot of the common teaching about candlesticks, about candlestick analysis, isn't really complete.
Yeah.
There's still a lot that's
missing pieces.
There's missing pieces, especially what's on the internet and what's seen. But then we talk about that actually in our lab, Forex Anatomy private trading community, which we encourage you guys to at least try for 14 days at a $1 trial.
Yeah.
So then,
yeah. So then, like, this is just a short plug for those who may not know. I know we're not going to spend too much time, but if you found that this was very helpful, please share this video. Please like this video. Please comment this video, and just share with the world. Share with everyone what we're doing, just to help you guys out. I know for each of these webinars or each of these meetings, we actually share with you guys little tidbits of what we share, even within our private trading community. Now, what I want to do is actually, we're on the brink of doing some good stuff with this community, adding some good lessons on scalping and different things like that. But if you found this content very helpful, if you found it was good, then we suggest that you take your education to the next level and join our private community for $1. You could try it out for $1 and learn certain techniques, learn about our Grand Slam trading strategy, which you'll have access to after your 14-day trial. If you really want to learn how to get high reward to risk trades, then this is it. We have a report and a video back here explaining how to use that strategy. These are the different sections. We have, our monthly training videos here. We have webinar recordings, weekly outlook videos, which you guys just saw. And the one area that we need to add more to is this live trading video section. And we're going to do that this year. Like, the reason why is because on the computer that I trade with, for some reason, it's been having difficulty having my screen capture video on and my trading platform on at the same time. For some reason, the two aren't working together. But we found another solution around that, and we're going to start recording these live trading videos just to show you guys how price action moves in a live real-time scenario. But and then we have this community forum. So then if you guys want to join our private trading community, you guys can for $1. And if you guys have any questions about anything we talked about on today's live Technical Tuesday session, or if you guys have any questions about even the lab private membership, please let us know. You can contact us on the support. I know last week we were away for a while, but we're back, and we still had meetings with our group, but we were really busy. We was away due to some family personal stuff, but for the most part, we're back now, and we're here, and we're waiting to help you guys out. So let us know if you guys have any questions or concerns about anything, and we'll definitely help you guys out. Also, guys, we have these particular tools right here. We have this advanced charting tool right here, and we have these position size calculator, pivot point calculator, spreadsheets, and reports. But yeah, and then we have the webinar recordings. We have our live trading room here. But yeah, you guys get the point. I don't want to really go over all of this in this video. The main purpose of this video is to help you guys out and to possibly bait your appetite on joining and becoming members of our private trading community, because we go over more currency pairs. We just don't go over the Euro, USD, and US dollar, Japanese yen. We go over more.
Right. Pairs. Yeah, but really, to be honest with you, really the purpose of this video is not to necessarily bait you to join, but it's really just to provide free information to our free subscribers. So then we really appreciate you guys just staying loyal, staying committed to our list, and you guys can come here week after week and just really see our analysis of Euro USD and US dollar Japanese yen. However, for our Forex Anatomy private community members, they will get access to more analysis on a variety of other currency pairs other than Euro USD and US dollar Japanese yen. But thank you guys so much for joining today's Technical Tuesday session, and we hope you can join us, if not in our Forex private community, but you can join us on next week's Technical Tuesday session. So may you guys have a blessed trading day.
Yeah, we hope this session was helpful, and yeah, we'll definitely see you guys soon. See you guys later. But have a wonderful week of trading. And for those who are private members, we'll definitely see you guys in the room tomorrow. But thanks so much for coming. Have a wonderful, blessed day. All right, guys. Talk to you guys later. All right. Okay, bye.